Welcome to Financial Insider Weekly. I'm your host, Michael Gray, CPA. My guest today is Lamar Baxter. Lamar is a business development representative for Entrust Administration Incorporated. He has over 20 years of financial experience. In addition to specializing in self-directed retirement accounts, he's knowledgeable about residential mortgage loans for both primary homeowners and investors. He has experience in commercial lending, accounts receivable factoring, and private notes secured by real estate. Lamar is able to provide his clients, partners, financial professionals, real estate professionals, and investors with the tools required to invest in real estate related transactions with a self-directed IRA account. And today, Lamar and I are going to be talking about investing in real estate in your IRA or Roth account. Before I get started, I'm going to caution that this is a big area. We're just going to hit some highlights and focus on things that we hope will be a continuing conversation for you talking to Lamar or another person that deals with this type of account. So get qualified legal and tax advice. Okay, welcome Lamar. Thank you for being my guest today.
Thanks for having me, Michael. Thanks for having me.
Okay. So Lamar, why did you get into the area of offering independent trust services for IRAs?
Well, in the past, as you mentioned earlier, I've had over 20 years of financial experience. Prior to coming over to the IRA custodial arena, I was actually in the mortgage business, and I had actually originated a few non-recourse loans. So I had somewhat of a background or knowledge of a self-directed IRA. And of course, in 2008, we of course had experienced the financial crash. I had pulled all of my money out of my actual IRA, SEP IRA account as a result of the crash. So I was actually being recruited by two major custodians for quote-unquote traditional investments. So it was between those two custodians and Entrust. So based on me pulling my money out of traditional investments, I decided to go with Entrust because of their philosophy and the wide arena of investments, something that I believe in. So I was kind of conflicted, but I couldn't actually go out and push or promote something that I actually did not have a vested interest in myself or wouldn't believe in myself. So that's what lured me over to Entrust.
Okay. Why would someone consider the alternative of a self-directed IRA with an independent trustee as opposed to other ways of using their IRA?
Well, in the past, a lot of people have been led to believe that we've all been told to truly diversify your investment portfolio. A true definition of diversification being having access to every investment vehicle possible or available to you. With traditional or conventional custodians, you have maybe 6 to 8 categories that you have access to. With a truly self-directed IRA, you have access to what we call conventional or traditional investment models as well as alternatives. So of course, we're talking about real estate, private notes, precious metals, foreign currency, you name it, the list goes on and on. So of course, opening up those arenas will basically put you in a better position to basically hopefully minimize loss over time, as well hopefully to get a higher return in something that you know and basically that you feel a little more comfortable in, maybe outside of traditional investments.
Okay. Now, how is your service different from a self-directed plan at a bank or a brokerage company? So a lot of them say, we have a self-directed plan and you can make choices and so forth. So how is yours different?
Well, of course, everyone used that term self-directed generically. The way we define a self-directed IRA is basically investing in both traditional and non-traditional investments. So one of the measuring sticks when someone is looking around for a self-directed IRA, whether it's with a larger or more traditional custodian, is asked them, can you invest in real estate? And 9 times out of 10, the answer is going to be no. So if you can't invest in those alternative investments vehicles, then obviously you don't have a self-directed IRA.
So in most of the ones that they say that they're self-directed, what they're saying is you have a choice and you can invest in whatever we offer, which happens to be, we may have bank accounts, we may have certificates of deposit, we may have stocks or bonds, but we don't offer other alternatives beyond those types of things.
That is correct. So yes, of course, their definition would be based on maybe a multitude of options they offer, which will basically fall into the category of self-direction because you do have choices. But once again, it doesn't cover the full spectrum.
Okay. So what types of retirement plans does Entrust handle?
We handle the SEP IRA. Well, we'll start off with the basics: traditional IRA, the Roth IRA, SEP IRA, and the simple IRA. We also have 401k plans and other plans that can be directed as well for small and medium-sized businesses as well.
Now, does your company handle 401k plans in general, or just the solo 401k, the one-person 401k?
We usually have the 401ks. We're usually set up to accommodate us for those who are self-employed or 1099, usually designed for those either a partnership or a husband, or should I say an individual and their spouse. So usually there's no common law employees usually that's allowed. So once again, it's focused on the model of individuals only when it comes to that plan.
So do you do like plan administration for those, or do you just do the custodian part for holding the assets?
We do both the custodial, we take on the role of being the custodian as well as the administrator. So we basically serve as more or less a trustee on the behalf of the IRA in terms of managing the assets, and when I say doing all the record keeping and IRS reporting.
Okay. Well, why would someone want to invest in real estate using an IRA or a Roth account?
Well, presently, real estate prices, well, at least depending on which area you're in, but for the most part throughout the U.S., real estate prices at rock bottom prices right now. In addition, real estate has always been known one of the best hedges against inflation. There's a lot of people who lost their homes who are looking to rent and will probably be like that at least for the next 3 to 5 years. And if someone's, for example, looking to purchase real estate to buy in whole, it's an excellent way to build a retirement account. So you have basically two components to build wealth in your retirement account, either through immediate cash flow through rents and or for in the future when equity becomes a factor again, you can actually build your account based on the equity of that asset. So unlike other assets, you have two components working for you to build your retirement account.
So you can have the appreciation of the property, and then you can also have the cash flow that's generated through rents and so forth. Now, one thing I want to mention to people, because you may see this at various times, so we're recording this on January 25th, 2011, so that gives you a little reference when we're talking about real estate being at rock bottom prices.
Yeah.
Okay, now, one thing that I guess I should point out, you were talking about people who had lost their homes and so forth. You can't hold a residence that you're using for your personal residence in one of these accounts, can you?
That's correct. IRS Code 4975 basically states that your retirement account, in particular your self-directed or IRA account, is for retirement purposes only, so there cannot be any immediate benefit either directly or indirectly. So you're restricted or prohibited from actually taking possession or residing in the property the IRA would actually hold. And that would include yourself, your spouse, parent, grandparent, children, and grandchildren.
Okay, good, thank you. All right, well, what are some advantages of investing in real estate using an IRA or a Roth?
Well, there's a lot of different scenarios out there. The two popular areas would be buying and holding or buying and flipping. Within the last 12 months, the buying and flipping business has kind of cooled off as a result of a lot of uncertainty, depending on which areas. But of course, you have a lot of different areas of growth when it comes to real estate. So for example, as I mentioned right now, if you can start off with a buy and hold model, and if you had to actually, depending on how you're structured in your transaction, you can basically convert that asset to be a buy and hold. It may be a short-term hold, but once again, you still are in a position to build your retirement account based on the income stream, provided, once again, the numbers work properly and there's no leverage, or if there is leverage, little or no leverage on the asset.
Right. So let's think of maybe some more things. So one is, of course, is that people tend to have a lot of their assets. In other words, if you ask people where their money is, And if you look in their personal checking account and their savings account, it seems like the cupboard is bare, and but you can go to their retirement account, and that's where the resources are. So in other words, when you're asking people where do you have assets that you have to invest with, that's where the money is in their retirement account.
And that's a good point. I know in the past a lot of people had focused on their philosophy of retirement or methodology or strategy for retirement was to have X amount of dollars maybe in a retirement account, but a good portion they were counting on in terms of retirement is equity in their houses. But of course, equity's gone, the market's down. So a lot of people who are looking to take advantage of, for example, real estate, the only people who actually have access to buy these properties at rock bottom prices are those who actually have cash or have retirement accounts. So we kind of consider the IRA, the self-directed IRA, as the alternative source of financing or capital moving forward.
Right. So, and then another thing that people may not be aware of is that leverage can be available in some cases. In other words, you can actually use cash in the retirement account, and you can borrow money in addition, just with a mortgage like you would for buying a home and for buying investment property. It's tight, but it's there, I guess.
It's a handful of lenders that are actually, at least the list that I have is approximately 8 to 10 lenders nationwide that are actually doing what's called non-recourse loans, where the loan is actually granted to the IRA. Credit's not a factor. The LTV varies from state to state. The underwriting guidelines vary from lender to lender, but of course there's a handful out there that are actually doing it. So that's an option that's available to those who have retirement accounts that may not have enough money to outright purchase a piece of property, but it maybe can take advantage of a non-recourse loan to assist them.
Okay. And also, sometimes you can arrange private financing as well. So the seller may be willing to carry paper and that sort of thing.
Correct.
When you said LTV, some people may not be familiar. So with loan to value.
Loan to value.
Okay.
Yes.
Okay. And of course, there's the factor with these accounts that we have tax deferral. So, and that applies, of course, for a regular IRA. In other words, as it's receiving income for the most part, it's not currently taxable. And so you're having an accumulation that's happening of growth in the account, and also though, so we've talking about the rental income, it may be taxed, may not be currently taxed. Now, if they do borrow money, we'll talk about it in a moment, some of it may be taxable as unrelated business taxable income.
Right.
But tax deferral is important when we're talking about these retirement accounts and why they're so popular for investing.
Mm-hmm.
There's another thing that was brought up to me by somebody, and that was the idea that you could actually acquire what will eventually be your retirement home with a Roth.
Good point.
So, in other words, you could buy the home thinking, well, someday maybe this will be my retirement home, and you have the possibility of earning rent. Basically, it will be a rental property. You can't use it personally, but then eventually, when you retire or you're over age 59 and a half, the home can be distributed out of the Roth account tax-free, and that's sort of amazing.